All right, before we dive in, just the usual heads up, this is all for educational purposes. It is not financial advice. Everything in this world comes with a ton of risk, so please do your own homework. All right, let's get into it. We are on day 11 of the DEXV bond, and things are, well, they're getting pretty tense. We've got some really interesting and kind of contradictory data points today that are all funneling down to one single critical question. So the big story for day 11, the thing we have to talk about, is the ratio. It's price against ETH. It is right back at a super important support level. Think of it like a floor. It's held up the price before, and now we're standing on it again. This is a make or break moment, for sure. Okay, so here's the number, 0.0239 ETH. That's down about 0.8% from yesterday. Now, you might think 0.8%, what's the big deal? And you're right, on its own, it's not a huge move. But where this number is landing, that's what makes it so important. See, the last time things got this low was back on day 5, when we bottomed out at 0.0235. And right now, we are hovering just a tiny bit above that line. This is exactly what traders call testing support. And that little gap, just 1.7%, that's everything right now. I mean, literally everything. If this 0.0235 level holds strong, that's a great sign. We could see a bounce, a recovery, just like we did after day 5. But if it breaks, we're in completely new territory and not in a good way. The stakes could not be higher. But hold on, because this is where the plot thickens. While that ratio is basically screaming a warning at us, some of the other numbers are telling a totally different story, a much more positive one. So yeah, let's unpack these conflicting signals. This is the big paradox for today. You've got the ratio down 0.8%. But then you look at the total value of the fund in good old US dollars, and it's actually up 1.2%. Crazy, right? So you've got to be asking yourself, how on earth is that possible? How can the main ratio be falling, but the whole fund is actually worth more in dollars than it was yesterday? It doesn't seem to add up. Well, there are actually 3 things going on here. First, the price of ETH had a nice little recovery, about 1%, and that lifts the dollar value of everything. Second, people are still buying in. We saw another 184 new bonds get minted. And third, the fund is just chugging along, earning fees and compounding them. That 1% ETH bump was just enough to cancel out the ratio dip and then some. And that's not the only good news. The other huge confidence signal is what the Treasury is doing. For the 3rd day in a row, the team has been putting capital to work. They're buying this dip. Remember how they bought heavily at the day 6 bottom? Well, they're at it again right now. When you add it all up, over these 11 days, that's about $66,300 they've deployed. This isn't just sitting back and watching. No way. This is an active, aggressive move. It's the team sending a clear signal. They think this price is a bargain. So you've got that confidence from the team, which is one piece of the puzzle. But the other piece is something we saw in today's trading activity, a massive, and I mean massive, surge in volume from a very specific place. Get this, total volume in the last 24 hours hit over $10 million. That's up nearly 8% and a new weekly high. And volume is the lifeblood here, right? It's what generates the fees. So seeing a number like that is a very healthy sign. But here's the kicker. It's not just how much volume, it's where it came from. One single token, Zora, was responsible for a whopping 56% of all of it. 56%! That's an insane amount of concentration. Yeah, Zora's volume just exploded, up 55% from yesterday. And look, this is a classic double-edged sword. It's amazing for fees, no doubt about it. But it also means the fund's health is kind of tied to the fate of this one asset right now. It's a big risk factor, and something we absolutely have to keep an eye on. Okay, so let's put it all together. We have this scary-looking ratio testing a critical floor. But at the same time, we've got the fund value going up, the Treasury buying aggressively, and record-breaking volume. It's a real tug of war. Let's try to make sense of it for a final verdict. If we zoom out and look at the whole 11-day story, it gives us some really good context. We had that first big dip down to day 5, right? Then we clawed our way all the way back by day 8. And now, here we are in a second dip, heading right back to that same exact spot. This is what you'd call a double dip, a second test of that crucial support. So, with all that said, our health status for day 11 is staying at concern. Look, even with all the good news underneath, when the price is teetering on a support level this important, you just can't ignore it. It's the main thing we have to watch. So just to be clear, why concern? It's simple. The ratio's been dropping for 3 days, and it's right on the edge of that floor. But the good news, the mitigating factors, they're strong too. The Treasury is buying, volume is booming, and the fund is worth more in dollars. It's a classic battle, bearish price action versus bullish fundamentals. And just to make sure we're all on the same page with this critical support level idea, we're talking about that 0.0235 ETH price. That's the point that stopped the bleeding last time. It's a line in the sand. If we stay above it, that's a good sign. If we fall below it, not so much. And that really brings us to the one question that's going to define the next couple of days. You've got the team buy-in, you've got volume surging, but you've got this downward price pressure. So will the 0.0235 floor hold? That's the cliffhanger. That is what we are all going to be watching. Hey, thanks for tuning in for this breakdown. And just one last time, remember, this is all just for info. It's not a green light to buy or sell anything. Please be careful out there and do your own research.